Hey team, so I'd like to walk you through how I would analyze a stock. The one that we're going to be using today is called ESCO Bionics Holdings, EKSO. That trades under EKSO. So first of all, I'd like to start with why I'm on Yahoo Finance. Yahoo Finance has been my go-to resource when it comes to taking a snapshot look of any stock that I'm interested in buying. So I can't really say, I don't have a metric to say whether it's reliable or not, but it is a reference that I like to use more often than not, and typically my go-to. So Yahoo Finance, I believe they do have a paid service, Yahoo Finance Plus. I've never used it. Everything that I'm looking for is usually on this side of the paywall. So let's get started. So again, we're looking at ESCO Bionic Holdings. A friend of mine actually brought this up because he was interested in the bionics industry and the movement that they're making in that industry. And I agree. I think that there is a lot of promise there. My only caveat is that it hasn't been tested. It's not publicly available for consumers. We just don't know how the market's going to react to it. But it is something that seems very promising, and the trend that medical might be going. Again, this is just my own thought process. It is not backed by any kind of assurance or any kind of empirical data. It's just my own sentiment as a personal investor. Please do not use this as a reason to purchase a stock or not. However, for educational purposes, I do want to use this as an example. So prior to going to Yahoo Finance, I went to the website of ESCO Bionics, and I kind of did a review, or kind of read a few paragraphs about their company, what they're doing, just kind of get a superficial understanding of what they're doing and the trend or the trajectory that they're aiming at. And I kind of concluded that they're still in their infancy stage, very young company, and just testing out their technology. Again, I think there is promise there because it looks like it can only grow. Currently, they're trading on the NASDAQ under EKSO at $4.28. One of the first things I look at is this kind of snapshot area here. Now, the first thing that my eyes are drawn towards is the dividend and yield. The reason I look at this primarily because that's my strategy. My investing strategy is, when it comes to buying individual stocks, I'm looking for a high dividend yield that I could hold for at least 3 or 5 years. One, to appreciate the growth, or to take advantage of the appreciation, and while it's appreciating, take advantage of their dividend payouts. So on the surface, this is something I wouldn't even entertain. Because there's no dividend and no yield, or there's no dividend and no yield. So I would typically be turned off by something like this. But because I've looked at the company, and then there is some promise, there might be some appreciation that could be beneficial to me. The next thing I'm going to look at is fair value. Now, this is a market analysis of the company's valuation. I don't know the math behind this overvalued heat map, but it is not an indicator or a deal breaker for me to buy or not buy a stock. However, I do like to skim my eyes over where this bar is on the heat map. But essentially, it's saying that the valuation of the company is, or analysts have an argument. There are some analysts out there that have an argument that the evaluation might be too high for what it's being projected for. Okay. The next thing I like to look at is this bullish pattern here. So when they say bullish pattern detected, it's usually probably referring to their 5-day moving average, 200-day moving average, and then if certain conditions are met based on that analyst, they will determine whether it's a bullish pattern or a bearish pattern, and that is an indicator to whether buy or not. Use that as you may. I think there's opportunities in bearish patterns, and then there's opportunities in bullish patterns as well. But that's going to depend on your strategy and what you intend to do when you buy this share or not. Next thing I look at is performance outlook. You'll see in other stocks that there's going to be a variation of these arrows here, but it's indicating short-term, long-term, and short-term, midterm, and long-term. If all of these are green, that's going to check another box of mine. Part of my strategy is to hold for at least 3 to 5 years. So I'm usually looking for this to be green, this long-term arrow to be green. Now, my assessment of this is it seems pretty accurate. I think in the short term, you're going to see some growth, some immediate growth. Nothing that I would take advantage or realize right away, but I would hold through this midterm downturn here that they're indicating. I would hold through it, again, because I'm a 3 to 5 year investor. And ideally like to see this as a green arrow going up. But I do agree with this assessment because, again, this company is in its infancy and it hasn't been tested. So I think this neutral rating is accurate. And again, I'm bullish about this technology and bullish about this company. So I do believe that this will turn up in due time. I'm not sure if that's going to happen tomorrow, next week, next year, 3 years, 5 years from now, whatever the case is. I do think there is a long-term value here. So this is a current assessment of it now, and I agree with it. The next thing I look at is earnings. Now, in my background in finance and a little bit of research, forecasting has never been accurate. I think in the latest research I've seen, which was a few years ago, forecasting is typically around 30% correct. And that's being pretty lenient. So what I'm saying is these forecasting bubbles here are never usually on. There's no matter how slight or how big the variance is, whether they've missed it below or high, it's never on. But it is a good indicator to see what trends the company wants to go. I think they made a pretty conservative approach over the last 3 quarters because they stabilized at this level. And that might be because they were burned these 2 previous quarters, Q4 of 2020 and Q1 of 2021. They projected high and they ended up low. So it sounds like they might have changed their approach to something a little bit more conservative, and then and in their favor, they beat their earnings so far by Q2 of 2021 and Q3 of 2021. And we're standing by for Q4 of 2021's outcome right now. But I definitely like to look at this. I'm looking for any patterns that go above the forecast. And I'm looking at what the forecasts are. If they're being conservative, that means they're not really confident with what's going on. That's okay because they're their infancy. But if they're beating earnings, especially for a more established company, I'd like to say that's a little bit more promising. So the next area that I look is I rely on Yahoo Finance's analysts. And if they're indicating in this heat map that it's a strong buy or a buy and even hold, that's going to make the determining factor whether I'm going to buy or not. And in that case, if it's leaning towards these 3, I'm going to probably buy. Even if and then you'll see in other companies that you'll see a variation of all colors. But if these 3 outweigh these bottom 2 criteria, it's still a safe buy for me. And I would go with it. But if these 2 outweigh these top 3, then I won't even entertain this any further and look at another stock. And then this thing, I think this recommended rating is a byproduct of this recommendation trends. So everything that's you're seeing here is kind of consolidated into this this linear chart here. And I believe it's saying that 2 analysts are saying it's a buy. Now I want to speak to how many analysts are giving you this assessment, because that has some importance as well. And I'll lean into that when we talk about this here. So analyst price targets, you see this 1 in the parentheses. That means 1 analyst has given their data or their research and provided their research to Yahoo Finance. And they're currently it's at $4.28. But that 1 analyst is indicating the high is going to be 11 and it's showing low. Usually there's a variance between the low and the high. But since there's only 1 analyst indicating this, then there's only 1 number to really report. So there's no variance here. And the reason that number is important to me is because I want to know that at least like 5, 6, maybe even 10 analysts have already done this research, and I'm relying on their data to provide an average, to provide a high and a low, to see where this stock might go. So one is not good. It only means that one person has entertained this and provided their data to Yahoo Finance. So this is so ultimately, if we take a step back and not look at the analysts, how many analysts have done the research, we're pretty much looking at what's the current price and what an analyst is saying it could project to. And then there's going to be justifications for that. I don't know if Yahoo Finance makes that available to us as a consumer, but this is exactly what I'm looking for. Just what's being projected versus where it's currently at right now. If you look at other companies and analyze other companies, this current price could sometimes fall under between the high and the low. So and then it could be next to the average, or it could be right at average. So make sure you take a look at that too, because if it's in the middle, then the low, it could obviously dip below the current price, and that means you're losing money if you're bought into this company. So well, that is the end of what I would look at as far as Yahoo Finance. You can definitely go down the rabbit hole with company outlooks, charts, all these different tabs here, which is why I like Yahoo Finance. At first glance, these are some of the things that I look for before I decide to buy a company or not. But that doesn't mean that I do additional research. You'll see that there's articles here that Yahoo aggregates for you. You could review some of these things and read these articles, see what they have to say, see what other analysts have to say. Look for the arguments against buying it. Look for arguments for people saying that they would buy it, and kind of understand the reasoning and see if your sentiment follows that. And make sure that make this the most educated purchase you can make, and hope that it can go up. Hope that it can rise in value, and that only means it falls in your favor. But you can calculate a lot of that risk here prior to buying, and that's kind of the emphasis I'd like to make. Is there's a lot of risk in investing in the stock market, especially individual companies, but you can calculate that risk and mitigate it as much as possible by doing a little bit of research and having a general understanding of where this company could be heading. So I hope that helps. If you have any questions, please feel free to reach out. I'll do anything I can and provide any resources that might be of use to you, stuff that I've used that's been useful to me. And I'll even go as far as showing you how I use those resources if necessary. But thank you very much, and happy investing.